Credit Repair HQ, Credit Repair 101, Understanding Your Credit Report. Traditionally, your credit report has looked like something out of a data collector's worst nightmare. Codes, lines of data, and mysterious marks made them very difficult to read. In the past decade, things have become much easier to read and understand. All three major reporting agencies follow similar formats for their consumer reports. Now, direct lender pulls are a bit more difficult to understand, but essentially all three agencies have the same information on the reports: personal, employment, public records, revolving accounts, installment accounts, mortgage accounts, collection accounts, inquiries, and creditor information. Personal information. Every report will contain personal information. Every time you fill out an application for anything that involves credit, this information generally ends up in your credit file. Information such as a telephone number, current address, or former address may be listed. Employment information. On those same applications, you may have had to list your employer. This is especially true in the case of an application for an extension of credit. This information will also end up on your file. Public records. A public record listing is any information obtained from the county, state, or federal courts. These types of records include bankruptcies, civil judgments, and tax liens. Each entry should have a file date, case number, balance, and other relevant data. Revolving accounts. The term revolving account is often used interchangeably with credit card. These accounts revolve in the sense that when you utilize them, what you owe is reported as greater and available credit goes down. When you pay it off, the opposite occurs. Understanding how these types of accounts report is fairly easy. The trade line usually reports the last 2 years of payment history, current limit, and current balance. Be aware, revolving accounts often have a major impact on your credit score. We will discuss that later when we talk about credit scoring. Mortgage accounts. All obligations that are secured by a mortgage are provided here. This will include purchases, refinancing, and home equity lines of credit. Installment accounts. Unlike credit cards, these accounts do not revolve. The account starts with a fixed amount owed that goes down with the subsequent payment. The formatting on the report will be similar to those of a revolving account. Examples of this type of account are an automobile loan and student loans. Collection accounts. Collection accounts involve third-party companies that have either purchased past debt obligation or are assigned to collect on debt obligation that are alleged to have owed and not paid in accordance to the stipulation of the contract. Finally, inquiries. Every time you apply for credit or there's a lender with business justification, for example, a collection company checking for new information, the inquiry is recorded and listed for other creditors to see. This information will fall off your report after 2 years. It is important to understand what is showing on your credit report when attempting to tackle the negative items that may be on there. I hope this video was informative. Please click like and subscribe for our new videos. Thanks.